we're going to get into some strategies, some methods, things that I'm doing each day to make my trades. And to get started, we're going to talk about indicators, the indicators that you need to add to your chart to get started. All right, so now this is TradingView, and their premium package allows you to add the indicators that you need to use, because if you get like the basic level, you're not going to be able to add. They're going to limit you on the amount of indicators that you can use. As you see up here, this number 12, you can't get 12 indicators with the basic package. So that's why I went ahead and just paid for that level so I could add all of the indicators that I need to add. Okay, so let's drop down this menu, and we've got everything turned off right now. Now, we talked about moving averages, and the first thing that you're going to add is the exponential moving average, and we're going to add a few of them. So we got a few here already, but what you do is you go up here to indicators, and I've already got it here, but you're going to type this in: moving average exponential. You click on it, and as you see, that was added just now. Right, so you're going to add, you got 1, 2, 3, 4, 5. You're going to add this 5 times. So you just click this 5 times, like right now, click it again, it adds another one. All right, so let's erase that. So once you add your moving average, you'll add 5 of them, and let's erase this one, and we'll start with the 8. So I'm going to show the settings. So once you add your exponential moving average, you're going to come over here to the cog. This box will open up. Now these are my settings. So for the first one, you're going to type in 8 for the length. Leave everything else the same. No need to go here to change anything unless you want to make it a certain color. Now I make my 8 moving average green, so you can change the color under style, and you also can, if you can't change the, where's the okay, so you can't change the, oh yeah, you can. If you want to change the thickness of the lines, you can come down here. But for my 8, I just keep it pretty basic. I keep it on this level here, and I keep it green. Okay, then you're gonna go to the 21, or you're gonna go to the next moving average, hit the cog icon. Under inputs, you're gonna make the length 21. Keep everything the same and make it whatever color you want. I always keep my 21 moving average purple. All right, so these are the settings. Everything is pretty much the same. You don't change anything but the color if you want to, and the length. All right, then we're gonna go to the 50. Cog icon, length, 50. Whatever color you want for your 50 moving average. 100. Cog icon, length 100. Color whatever you want it to be. And then the last moving average will be your 200. Length 200. The color, whatever you want. And okay. So at this point, you should have 5 EMAs. You should have an 8. You should have a 21. You should have a 50, a 100, and a 200. That's 5 moving averages. All right, so if we turn, now for day trading, this is the 5-minute chart, so it's a smaller time frame. I only have on the 8, the 21, and the 200. These are the only 3 that I'm using for day trading on smaller time frames. All right, so now the other one that you're gonna need to add is this here, and under indicators, that's going to be your VWAP. So VWAP, you can just type that in and it'll add it. Volume weighted average price. You're going to click on this volume weighted average price, and that's going to give you this here. So let's see this. Let's see the settings for VWAP. Okay, so when you open up the VWAP settings, you can turn, these boxes are probably going to be checked. I turn all of these off, and I just want the VWAP, and I like to make mine yellow. All right, and the thickness on my VWAP, I make that line thicker than the rest of them, or thicker than the 8 and the 21. So for VWAP, choose your color. I like it to stand out a little bit more than the 8 and the 21 moving average, so I make the line thicker. This box can be checked. Under inputs, this is what I have here. And you pretty much leave everything the same default. I didn't go in here, I didn't change anything here. So keep these settings for your inputs, and this never changes. So style, this is what you've got here. Inputs, this is what we got here. All right, so those should be your VWAP settings. All right, so VWAP. Now let me jump down to this 200 moving average, because I like to make the 200 the thickest line. You see, this is thicker than, let's turn on VWAP. Okay, so now you see what I have. So this is the thickest line. This is a little bit thinner than this one, and these two are the thinnest lines. So for my 200 moving average, this is the thickest line I have, because I want it to stand out. The 200 moving average, how we talked about, when the price action reaches the 200, it typically will react. So I want this line to stand out amongst the rest. All right, so this is what I have as far as my moving averages, my VWAP, my 200 for trading each day on the smaller time frame, which is the 5-minute time frame that I use each day to make my entries. All right, so let's talk about volume. You're going to need to add volume. So you'll come up here to indicators and you'll type in volume. Once you type in volume, you'll get this here. And settings on volume, you're not going to need to make any changes for your volume settings. Now, this is not necessary to have by turning it on, but let's just turn on volume so you can see how that looks at the bottom. Well, you've seen it before, but okay, now we've got volume turned on. And if we go open up the settings again, this line just gives you like basically an average of how the volume is going throughout the day, this white line. So you can leave it off or turn it on. It's up to you. But these are the volume settings. So this is style. These are your inputs. So everything is pretty basic when it comes to volume, but you definitely need to add volume as one of your indicators. Okay, so recap real quick. We've got, you should have 5 EMAs over here: 8, 21, a 50, a 100, and a 200. But right now we just have 3 of these turned on the 5-minute chart for day trading. Okay, the VWAP, we have that. The volume, we have that. Now, the next thing we're going to talk about, and we're going to talk about the 100 and the 50, but that's going to be more so on your daily time frame. You know, for your larger time frames, then we add the 50 and the 100. Okay, let's talk about pivots. Now, to add pivots, come back to indicators, and you'll type in pivot points standard. Pivot point standard. Let me just see something real quick here. Pivot. Okay, pivots. Yeah. Pivot point standard. That's going to be this one here. And here are the settings for the pivot points. So you can copy these settings. Everything I have here, just copy this. Now leave it up here for a little bit. But pivot points are really good. Now let me just say this. There's no one indicator that is gonna be something that you are gonna say is the best indicator. These are, everything you use is like a toolbox. You don't use, like for a job, you don't use every tool on every job. It depends on the job, and when the job presents itself, you decide which tool in your toolbox you're going to use for that particular job. Okay, so you may be so let's say you're a carpenter. Today you may need to use a wrench. But yesterday you didn't need to use a wrench. But you always keep your wrench in the toolbox just in case, right? So these indicators work the same way, right? So just, I want to make that clear, all right? So pivots. So you have these settings here. Under inputs, you got that. And style, invisibility, don't worry about. Just inputs. So pivot points, I like to take a look at these each day, and I'll show you why. Let's close this down. Okay, so let's turn the pivot points on. Let's collapse this for a second. So now pivots, a lot of the time, each day, they can give you an idea of where you can see a bounce. And if you look to the left, you'll see the prices, the price points, or the price levels, I'll say. So let's take yesterday, for example. If you would have had your pivot points on, you see this level 485.95. Now what happened when the price came down from here? You see we had some sideways action and some bounces right here at this 485.95 level, and then we pushed back to the upside. So pivots can give you an idea of where something may reject and head back down, or where you may get a bounce back to the upside. So it's always good to just be aware of the pivot points each day. And we'll go back a little bit. But again, every day is not going to be something that you're going to put a lot of weight into, but every day you need to be aware of the pivot points in the price range. Okay, so on this day, the market opened right here on this candle. Let me zoom in a little bit more. Okay, so we got 5-minute candles, and you see price action. Here's a pivot point here. Here's a pivot point here. 489 level and the 487.19 level. So price came down to the pivot, and then the pivot was lined up with the 200 moving average. So you got a lot of confluence there, a lot of action going on, and the likelihood of a bounce to the upside. Because like we said, the 200 moving average, when price comes down and touches it, you're usually going to get a reaction, a bounce back up, or sometimes, as right here, price will push through the 200. And then you see right here, it pushed through it and went back up and touched it and bounced back down. Went back up, bounced back down. So that's why I keep this line thicker than the rest. But to get back to the pivot points, you see we had the touches down here. We went to the upside, and what happened? Once we reached the pivot point at the 489 level, we went back to the downside. So this is why I like to keep the pivot points on. So if we fast forward to today, right now the market is closed. So let's fast forward to pre-market right now. So right now, the trading day hasn't started, but let me go back and open up pivot points. Hit the cog. You can do number of pivots back. So how many days back do you want to go? So let's go from 5 back down to 1. And 1 is going to give us the actual day that that you're on. So we're on today, of course. Now, since the market hasn't opened, we don't have any action right now. But when the market does open, I have my levels. So let's look up here. Right now, SPY closed at 485.57. That was the last price of SPY. So now I have the possible levels, and let's make this so you can see all of the pivot points. Now, as you see, the likelihood of SPY going to 498, that's not likely gonna happen today. Anything could happen, but it's not likely. So each day, you're not going to need to worry about all of these pivot points, all of these price levels, just the likely range that you'll be in. So we know that this is the 485 level. We know that it could go to 488, maybe 492. All right. Now, as far as how low could it go? Well, it could go to 482. It could go to 479. Then we got 476. But will it go to 472 today? Probably not. So I like to just kind of keep a range here. Maybe like 3, especially with SPY. Now, some other symbols or other tickers, you may get a huge fluctuation, but just be aware of the pivots. And what you can keep the pivots on throughout the day, or you can just go to your line tool and just make a line at the pivot. So you can do that as well. So let's say you want to make a couple lines. Where's that? Okay. You want to make a few lines. You can do it again. So you can just mark each pivot like this. Let's mark this one. And let's mark this one. And then you could turn the pivots off. You can hide it. So now you've got your pivot points marked with lines. So you can go that route, or you can just leave the pivots on. And then that way you don't have to have these lines. So visually, whatever you prefer, you can do. All right, so pivot points are just good to be aware of. So as the trading day starts today, I'll be aware of, let's say price action starts to head to the upside. Now it could push through it, but at least I'll know at this 488.91 level, it could reject and head back down. Or let's say if we open the market here and we head to the downside, I know that at the 482.52 level, it could stop and head back up. So very good to be aware of your pivot points each day. All right, so we got pivots right there. All right, and let's see what else we have here. So now I've got my watch list. So of course you can add your symbols. Trading View, hit the plus button here, type in the company. Say you want to type in Tesla. And there's Tesla. You can add it. Hit the plus button here. Well, I've already got it added. That's why the X is here. But whatever you want to add, hit the plus button, and then it'll go over here to your watch list. And you can see I've got a lot of stuff on my watch list. Probably need to take some of this stuff off. I've got some stocks in here that I'm no longer interested in, so need to do an update there. But let's collapse that pane and let's go to the daily chart. Reset the chart. Now the daily, you see we don't have the 50 and the 100 moving average. So on the daily chart, I'm going to turn that on. The 100 and the 50. And for the right now, let's turn off the pivots. Because I'm primarily using pivots on the 5-minute chart. Okay. So now you've got the 8, the 21, the 50, the 100, and the 200-day moving average. All right, now we got them all up here. And let me just take these lines away too real quick. See, 5 minute. Okay, yeah, let's take these lines off. All right. Got our volume down here. Okay, so now we have SPY. Let's just pick another symbol just to mix it up a little bit. Let's go to Tesla. Okay, that's the chart. Let me go to a cleaner chart real quick. Google. Okay, a little cleaner. All right, and the VWAP I'm not really using as well on my on the daily chart, so we can turn off VWAP. Okay, so we got the 8, 21, 50, 100, and 200-day moving average up, and we've got volume. All right, so as you can see, look at the price action. It came down and did what? Bounced off the 200 moving average. Here, bounced off the 200 moving average. Okay. Now the 100 moving average, I have that line a little thicker, but you know what? To tell you the truth, the 100 moving average, I actually can make that one thin as well. Doesn't have to really stand out as much, but I do want to be aware of it. All right. So indicators. Now let me just show you something else as well. All right. So this is the daily chart. Now I want you to add this indicator as well. UT bot alerts. So that one is. Let me see which one. Okay. UT bot alerts, and this by this UT bot alerts, and just make sure it's this one right here. When you click on UT bot alerts, it's gonna bring it over here, and also add linear regression candles. So that's gonna be, okay, which is the right one? The right one is yeah, okay, right here. Linear regression candles. Make sure it's this one. All right, so you can add that. All right, got it. Okay, so we got these two here: linear regression candles, UT bot alerts. Now I'm going to show you how this works. Now here you'll get signals, buy signals and sell signals. Let's go back to SPY. And now for the time frame here, we're going to go to the 1 minute. So now we're on the 1 minute chart. We're going to turn off the 50 moving average, and we're going to turn off the 100 moving average. Next, we're going to go to our UT bot alerts, and I want you to copy the settings. Just copy these settings. Everything will likely already be checked under style for you, but just make sure yours looks just like this. Under style, make sure it looks just like this. Okay. Inputs. Make sure this is 2. Make sure this is 11. Okay. So this is what you need to have under inputs, 2 and 11. And for style, just make sure it looks just like this. For UT bot alerts. Visibility, don't worry about that. It's gonna look like this. Keep it the same. All right. Linear regression candles. Let's go to the settings here. Inputs, make sure this is 7. Linear regression length, make sure this is 11. Under inputs for linear regression candles. 7 and 11. 7 and 11. Let's go to 7-Eleven and get some cookies and a Slurpee. But now, well, 7 and 11, okay? And on style, just make sure it looks just like this. Just copy this right here. All right, so this is style. Make sure it looks like this on yours. And inputs 7-11. All right, okay. So I'm gonna show you how this works. Now, we're on the 1-minute chart. Each of these candles, instead of 5 minutes, represent only 1 minute of the trading day. So this was all of the candles from yesterday, all of the 1-minute candles. Now, I'm going to turn on UT bot alerts. I'm going to turn on linear regression candles. Now you see how that changed? Looks kind of crazy now, right? Let's collapse this. And we're going to go up here and hit these 3 dots. And we're going to go down to hide. Now things look smoother, right? So what do you see now? You see sell and buy. And these are signals that you get throughout the day. So let's collapse this. So this is good if you just want to get, it'll give you a signal and what you're looking for. Let me add, let me see here. Let's add, this. Okay. Now we also need to add one more. And that is this here. So we have, let me make this, okay. Now you also need to add this one here, and let me just see which. Okay. Add this one here, STC indicator. We're gonna add that one. Let me just make sure that's the right one. Yeah. Let me go down here and check the settings real quick. Okay. So once you add STC, let's see here, style. Okay. So you're gonna go to your indicators, type in STC, add this one here. You're gonna add it, and then let's close that. It's gonna pop up, and it's gonna be down here. Okay, so you're not gonna have the STC on the chart here. It's gonna come down here, and as you can see, you got red, greens, turning back red, turning back green again. So how this works is, let's close this down a little bit. Close this down a bit. For example, it gave a sell signal. So the market opened right here, then it gave a sell signal. So once you get, let's zoom in a bit more so you can see this. Once the sell signal pops up and a candle closes below this white line, and when it goes from green to red, so that's the signal that price is likely to go to the downside. So you want to see the signal show itself. You want to see a candle close below this white line. That's this candle right here. And you want it to be, the line to be red down here. Once all 3 of those things happen, at that point you can look to buy your puts, so that way you make money as the stock goes down. Okay, so this is just an indicator that I use from time to time as well. So I'm showing you these indicators, but you're not going to be using everything every day. Well, your moving averages you're going to use. You're going to use your moving averages, but I'm just showing you everything and giving you options that will help you, make a decision on whether or not you want to take an entry. That's why I say you may want to have 2 or 3 monitors, at least two monitors. Okay, so let's look further at this. So you have the sell signal here. Let's go forward, forward, and forward. Then we got our first buy signal. Okay, so now it's the opposite. You got a buy signal here, but then you had this candle. It's kind of blended here, but the buy signal's here. This candle closed above this white line. This candle here. So buy signal, a candle closed above the white line, and it was already green down here. So you could have taken an entry for calls to make some money on the way up. Then we went up. When it went up, got a sell signal and a candle that closed below the white line. And look to the bottom here at the STC. This line is red. So you could have made some money on puts because the price level went to the downside. Let's go further. Let's lift this up some more so you can see. Okay. Buy signal on this candle. This next candle closed above the white line, and we went green here. But you see this little bit of red, and then a little green, and then red, and then the green came. So that's the thing with this indicator. Like it'll give you a few colors back to back really quick sometimes, and then it'll give the more solid, smooth color. So again, you can make a determination. You can jump in here, let's say for calls, and even if you got in right here, it never really dropped below. So chances are you would have stayed in anyway. You would have your stop loss set, but it didn't go back down to it didn't drop. So even though the color went red here because of this action here, like you had the red activity, price headed to the downside just a tad, but not much. That's what brought about this. All right. So sometimes you will see that. All right. So that's how this indicator works. The linear regression combined with the UT bot alerts. All right. So we can turn that. And then when you want to go back to the regular candles, you can just hide this, hide that. Now you have no candles. That's because you have to go back up here to these dots and go to show. Now your normal candles will appear again. So I only do that on the 1 minute chart, you guys. Only on the 1 minute chart do I turn on the UT bot alerts and the linear regression candles and the STC. The only time. So that's why I have the STC, or I had it hidden. So I collapsed pane and it doesn't show the STC anymore. All right. So, and of course down here I have my MACD. So to add the MACD, same thing. Go up here to indicators, MACD. Okay, moving average, convergence, divergence. And you can add your MACD. That's this here, and then your RSI as well. Relative Strength Index. Click on that, and they'll add your RSI down here. And I'll just show you the settings on those. So let's go to, MACD settings, hit the cog. You can copy my MACD settings. Now I like to keep the color green and purple. All right. So these are the MACD settings. You can add that for inputs. We can use these numbers. So you can copy this for the inputs. Okay, so we got inputs, we got style, and then visibility. We're not going to mess with that. Okay, so that's the MACD settings. RSI. Let's hit the cog. You can copy these settings. Let me see here. We got. It's not making a difference. So I like my RSI to be yellow. You can pretty much have this here for your settings as well. So copy this. And then for the input, the RSI length, I have it 14. All right. These are my RSI settings. All right, everybody. So once you get your indicators added, you're ready to roll. All right, let's close that up. Okay. All right, so don't click on that. So we'll jump back over here to the 5-minute chart. Reset that. Okay, and of course you got your pre-market area, which will be shaded here in this orange color, orangish color, and this was post-market yesterday, this blue color. So we zoom out, you see the 5-minute chart and all the days, the trading day, post-market of that same day, pre-market of the next day, the trading day is what we call intraday, and then post-market. Next day, pre-market, intraday, this is during the trading day from 9:30 a.m. to 4 p.m. and then the post-market activity. Now I want to talk about how you can look to get the best entries and the best exits when you are looking to take a position on a company or SPY or whatever it might be. So right now we have Tesla. This is the 5-minute chart on Tesla. And what I want to show you is the Fibonacci retracement tool. Okay, the Fibonacci trading strategy uses the golden ratio to determine entry and exit points for trades of all time frames. All right, that's the definition of the Fibonacci strategy. Let's jump back to the chart. Here's Tesla. Here's a day where Tesla went to the downside big time and then went back to the upside big time. So we're going to look at an example. On TradingView, you come right over here, hit this little arrow, and you're going to select Fib retracement. Okay, we got it there. Let's just put it on the chart. Once you have it on your chart, you can come up here to the settings cog. And I want you to copy my settings. This is what you need to put in. Colors, whatever you want, no problem. But you want the 0, you want the 0.786, you want the 0.5, the 0.618, the 0.65, and the 1. This is all you need to worry about. Don't worry about coordinates, don't worry about visibility, just these 6 points here, these 6 numbers. But I would recommend you make them different colors. Don't make them all blue or all purple. Try to make them a bit different. All right, now these 2 are yellow because we call this the golden pocket, and I'll talk about that here shortly. All right, so you got that. Let's close it down. So let's say, after this decline, now we're looking for calls. So we're seeing some strong green candles going to the upside. We break above the 8 moving average with this candle here. We continue up, head down a little bit, and then we see another aggressive green candle. So at this point, once this green candle closes above, see, this kind of went up and it went down slightly. But once this shot up with high volume and closed above this wick, now we're we have a bias to say, hey, price is headed to the upside officially with this candle. Then this one came. Now this one closed above the 8 moving average and the 21 moving average. This one continued to head to the upside and closed above our VWAP. Now at this point, I'm looking to take calls because I'm looking like, hey, we're officially headed to the upside. But I don't want to get in right here. I want a discount. It's like when you go to Walmart. You probably are going to Walmart sometimes because you can find a discount there on a lot of items. You know, you go to the mall, you know, you want to see the clearance section. You want to see the sale rack. What's on discount? What can I get? How can I get a quality product for a discount? Same thing when you're buying your options. Don't buy high, buy low. In order to do that, we're going to use this Fibonacci tool. And since we're looking to buy calls, we want our 0 line at the top and our 1 line at the bottom. So as soon as price came here, when this candle happened, a red candle, then we had this form. Now at this point, I'm going to take this as a temporary peak. So just imagine that there's none of this action going on right now. Right here is all you see for the day. Right now, this is where you are at the moment. You don't see any of these candles forming yet, right? But you do see these two that form. And then you see this one that forms next. So I've got a peak right now. I would have taken my Fibonacci tool, and this was the previous pullback, the previous low, not the low of the day, which is here. Let's move this up a little bit. Not the low of the day, which is here, the previous low. That's here. So I'm going to place my Fibonacci tool. I want our 1 line to be at our previous low. And then when I'm seeing that a new high is forming, but we're headed down slightly, now I'm like, hey, you know what? A pullback is happening. I want to take calls, but I want to get the best price. So I would have taken my Fibonacci tool and put it at the peak of our temporary high. Okay, so now we have this tool, and as far as entries, we had the push up here, had this here, but now even though this candle came down and it closed below this candle, that's another thing. This candle closed below this candle, which is a bit more confirmation to say, hey, we are pulling back just a bit. But then this candle came. Then this one. So it's like, well, you know, we're not officially headed anywhere right now. At this point, I'm looking to only jump in for calls when it gets to our discount zone, and that is anywhere from the 0.5 to the 0.786 zone. This is our discount zone for entries to continue to head back to the upside. We don't, even though we know that price is pulling back, we have strong conviction that it's going to continue to go up because of all of this action right here and these huge green candles closing above VWAP. This one closing above the 8 and the 21 moving average. So we feel like, hey, price is going to continue to go up, but we don't want to buy anywhere in this zone. We don't want to buy anywhere here. We want to wait until it taps this 0.5 line at least to take our first entry. All right, so once this candle happened, this aggressive red candle, we saw that it pushed down and tapped into our zone. Now, when I talked about these two lines being the same color, this is a golden pocket. So this is just an area, kind of the sweet spot of the Fibonacci tool. And you see, look at what happened. This thing formed a red candle, Then this candle formed and did what? Tapped right into our golden pocket. After that, it shot straight up. So what I would have done was, once this candle had formed and tapped into our golden pocket, before this candle would have closed, this is the 5-minute chart. Each candle is 5 minutes. So if you take a look down here, you can always watch this clock. So let's say, what time is it right here? Okay, 12:40. Okay, the time is down here at the bottom. So on this candle, it was 12:40. This candle is 12:35. Okay, so at 12:40, this candle started to form. Now, again, it's a 5-minute candle. So before the clock hits 12:45, you have time to make a decision. So I would have entered for calls right here. My stop loss would have been in this area here, probably somewhere right in this area, because I don't really want to see it push past this 0.786. It's cool if it touches here because that's a deep discount, but I'll tell you what, you definitely don't want it to pass this line. If you see it, let's say for example, you would have gotten in for calls right here, and then another aggressive red candle would have come and closed below this line, you want to get out of that play immediately, because that means it's not likely going to continue up. But this is a good scenario. We pull back and we get into our zone. So anywhere up in this area is a buy zone. So we tap into our golden pocket, could have taken calls right here, and then we would not have been in the red at all, because price action continued up. It pulled back here as well. What did it do? It kept going to the upside. As you see, price action kept going back, or kept going up. So this is how you determine when you want to enter. And now taking profits is all up to you. We want to always take profits. So let's say you would have gotten in here, big aggressive green candle, this candle formed, and then this one formed. You could have closed your position and taken profits, and rinse and repeat and do the same thing again. All right, so this Fibonacci tool, it works really good, and it keeps you, it makes it to where you're more likely to have a great entry, all right, and not a bad one. So this is an example when price action is going to the upside. So remember, the previous low, then the high that starts to form, take your tool from the bottom to the top, and always wait to buy your calls. Wait until it starts to touch the 0.5 level. And this, now you could have, let's say this candle came, it closed, then this candle starts going up and down, and before this candle closed, you could have gotten in and made money there. Let's talk about when price is going down. Let's delete our tool here. Let me find another day when price is going to the downside. A good example. Let's see, what do we have? Okay, let's look at this day here for Tesla. Now this is a down day for Tesla. Well, it went down, went up, but here it started to go to the downside. So we are looking to, we want to take good entries. So we want to look at, let's say right about, no, let me look at another day, because that was a choppy kind of day, a lot of wicks. That is one of those days where you may have went light just to minimize your risk. We want to look at, this is a good day right here, because there's an aggressive push to the downside. Look how aggressive this is. Very aggressive. A lot of red volume down here. So let's say you missed this action right here. You didn't really get in, and now we're getting down to the bottom here. We're forming a base. So you're watching, price action heads back up. slightly, but then two more aggressive red candles take place. And it's forming somewhat of a support area. Got a touch here, a tap right here, a tap right here. So this is somewhat of a, we can just draw a little box. Where's that? Look at this tool. Somewhat of a little support area, temporary support right there. Tap, tap, tap. Now we see that everything is looking pretty bearish right now, but there's no real strength or no real push to the upside, right? We got two green candles, but the volume dropped off. So volume didn't increase. That's one sign. And then the very next candle is a huge red one. And then the next candle is a huge red one. So this one closed below this one. This one comes and closes below this one. All right, so we're still feeling like things are bearish. Things are still headed to the downside. What do? We grab our Fibonacci tool. Let me slide this over so you can see. And since price action is headed to the downside and we want the discount, we want our 1 to be at the top, our 1 line, and our 0 line to be at the bottom. Okay, let me zoom in more. All right, so what I would have done, the previous high is right here. This is the last high we had. So I would have taken my tool and I would have gone from this low to this high. And here it is. We're gonna take our 0 line and put it at the low, and then because see now look, we made a slight high right here. Price went down. It did not make a higher high. This would have been a higher high had it gone like this above this level. But what do? A lower low. So I would have taken the tool from here and all the way up to the top of this previous high. Okay, so now we see an aggressive green candle happen. Then we see a smaller one, another one, and another green candle. Now remember, this is our big discount, the 0.786. When it taps this line, now you could have been buying puts anywhere in this zone. Anywhere in this zone is fine, but again, in this situation, you don't want to see a green candle close above this 1. That means it's probably gonna head to the upside. You don't want to see that. If you do, get out. So if you bought puts up, let's say you bought puts right here, and then this candle would have been a green aggressive candle that closed above, you need to get out of that play. And I said closed above, not wick. The wick is when it touches and it gets pushed back down. I'm talking about when the candle closes and you see that the candle's gonna close above, get out. But anyway, look at where we at. We tapped this 0.786, and then this candle formed. You always want to wait. Don't be quick to jump now. Don't be really quick to jump. Wait until this candle closes fully. See what the next candle is gonna do. When this candle formed, we see a slight wick, but a push down. Before this candle would have closed, I would have jumped in for puts on this candle right here. If I didn't do it on this candle, I would have done it on this candle before it closed. All right, so again, anywhere between the 0.5 and 0.786 zone is all discount, because price action is still bearish and we want to make money as it goes down. We're buying puts, so we want to buy these puts in this area here. And what happened? Price headed to the downside. So now you could have scalped and taken some profits here. You could have stayed in the play because price went back up. And then look, we had a nice big push to the downside. So me personally, I would have stayed in the play, because that's why it's so important to enter at discount. Because let's say, for example, you would have gotten your puts right here. You would have been going into the green, but then it started to go back up. So you would have started to lose some of that green as price went back up But however, you would not have been in the red. If so, just a little bit, just a tad bit in the red, not enough to panic, especially if you're not oversizing your position. You go back to risk management. You don't want to put in too much. So in this example, price did come back up, but look at what happened next, you guys. It shot down. So your entry was right here or right here. Fast forward, this thing went down nicely. Nice strong red candle. Closed below this previous not structure, but these previous lows. All right. This candle really made it like, hey, this thing's going down, and it kept going. Once you saw the price action was starting to form a base going to the side, you could have taken profit right here. So I would have waited, and as soon as I saw this candle here, and then this next candle with some increase, let me move this over. When this volume bar increased to this volume bar, so from this candle to this candle, I would have jumped out with profits right here on this candle. All right, so my entry would have been up here, and I would have bought puts. I would have got out right here with a nice profit. So we see the same thing happen, a pullback. Let's take our tool, and we're gonna go from the low to the previous high, which should be right here. Let's stretch our tool up. So the previous high is this wick, and our base, our new low is right here. And look, it's like, it's the same thing. Let's move it over just a little bit. Okay, so we're up here. All right, so this is our range. It touches down here, and then what does it do? It comes back up into our 0.5 zone. So you get this candle form, then you get a red bearish engulfing candle. You could have taken puts again right here. So you could have gotten in up here, gotten out here with profits, gotten back in up here, and look at what happened. A huge red candle followed by another red candle. And once you saw this candle form, typically when you see this kind of candle at the bottom of an advance, like the body, this is kind of a when the wick is at the top and there's a body toward the bottom, and then you see this one form as well, and it never closes below this previous candle, take profits. Just jump out, because it could go down further, but just take your profit just to play it safe. But as you can see, this tool is great for pullbacks. You wait for the pullback, wait for it to touch anywhere in this zone, starting with the 0.5 level to the 0.786 level. Anywhere in this zone is good to start entering. You can, let's say you want to buy a total of 5 contracts. Well, you can buy, as soon as it touches this level, you can go ahead and, let's say, buy 1 or 2. See if you get a better price. You can buy another 1 or so up here, and then just kind of fill it out. And that's how you want to use this Fibonacci tool. All right, and we're going to talk about market structure as well, and how to basically apply it while using market structure. Okay, so this is the Fib tool, really good for those entries and exits. Now let's talk about what kind of time frames am I looking at throughout the trading day. And let's say, for example, I'm trading SPY. It's a little different than if I'm trading any other company. So whether it be Tesla, Nvidia, right now I have Apple pulled up. So anytime I'm doing a company, I have it one way. If I'm doing SPY or QQQ, I'm doing it a different way, but just a slight difference. So right now we have Apple right here, and let's see. So what I recommend normally is that you have 3 monitors. Well, no, I'm 2 at least. Like if you got 1, you can get by, you can trade, no problem, but at least 2. So if you have a desktop or a laptop, if you can get an external monitor and hook it up, that will give you 2 screens. So you want at least 2. Now 3 is the best. Like that's the better because you have an extra monitor. You can put another chart on the 3rd monitor and have that set up. But at least 2. If you have 2, it's no problem. And I'll show you right now what you can do if you only have 2. You can come up here to this icon, right? So when let's say if I'm trading any company, Apple, whatever the company is, there's 3 time frames that I'm looking at throughout the day as the trading day is happening. I'm looking at a 1-minute chart, a 5-minute chart, and a 15-minute chart simultaneously. If you come up here, you see you have options for kind of like dividing the screen. So let's choose this option right here. You have 3 blocks. And look at what it gives us. So like I said, a 1, a 5, and a 15-minute. So the 5-minute is where I'm looking to take my entries. Okay, and then we can go here, click on that. We'll type in Apple. Oh, type the wrong thing. Okay. So now we have the 1 minute on Apple. That's the 1-minute chart. We'll go here, Apple, and we'll make this the 15-minute chart. So now just on one screen, I've got 3 different charts. So I want my 5 to take up half the page. I want to see that a little bigger than the rest. And I've got the 1 minute and the 15-minute up. All right. And let's just say if I only have two screens, this would be on one monitor, and then on my other monitor will be my brokerage platform where I'm actually entering in my orders. Okay. So now this is really all I'm looking at when it comes to a company. 3 charts simultaneously. All right. Now, so this goes for, again, if it's Apple, Tesla, Microsoft, Google, Amazon. And what I'm looking for is I'm looking for things to line up. So if I'm seeing support forming on, or let's say just a confluence, I'm seeing 3 things happening at the same time on all 3 charts, my probability of having a winning trade increases. You know, now if I'm trading SPY, QQQ, or something like that, I've got the same thing going on. I got the 5-minute on SPY. So let's just do it real quick to show you. Okay, so if I'm trading SPY, I got the 5-minute going. I have the 1 minute, and I have the 15-minute. But in addition to SPY, you know, SPY is the S&P 500. SPX tracks the S&P 500. So, and a lot of people like to trade SPY because you can get contracts for pretty cheap, especially if your expiration date is like a 1-day expiration, a 2-day, or a 3-day. The contracts are relatively inexpensive compared to trading some of your other mega cap stocks like your let's say your Apples or your Nvidias. It can get more expensive. So some people like to trade SPY because you can buy cheaper contracts. But let's go to, so let's just say I'm trading SPY, right? And let's just say I have 3 monitors. This is on one monitor. All right. And on the second monitor, I've got SPX. So let's just say we have, okay, so now on the second monitor, I'm gonna go with half and half, a split screen. So I'll have SPX, and I'll have a 30-second chart on SPX. And I'll put SPX over here, and I'll have a 1 minute. So if I'm trading SPY, for example, on one monitor, I have a 30-second chart and a 1 minute chart. On the other monitor, if I'm trading SPY, I've got the 1, the 5, and the 15 minute. We got all of that going on. So I can see everything going. And then on my third monitor is where I'm actually entering in my orders on my brokerage platform. So if you just look at SPX, now 30-second, okay, let's just read 30, yeah, 30 seconds, okay. So if we look, right, let's zoom out just to, oh, what's the wrong one? Okay, let's zoom out, and we're gonna zoom out here. We can take off this 200 moving average just to show you really quick. Okay, so you can see my crosshairs on both sides, right? It's support here, but we had a bottom here, but if you look to the right, it's also a bottom. So you want to see the same thing lining up. Now this is a 30-second chart. So right now this is Thursday. Let's see if we can get a lot of it in the screen here. This is all one day right here. Let's go over here. Thursday. Wednesday is going to be, okay, so this is all Thursday. So take a look on the left right here. We have a bottom on the 30-second chart. We need to back up just a little bit more. Okay. What I like to do is I'll take like a box or a line, and we see we had some support briefly right here, and then we pushed to the upside. It came back down, but then right here, so we'll take like our box tool and do that over here on our 30-second chart. We'll do the same thing over here on the 1-minute chart. Push that up just a little bit. We can zoom in. So that's what I mean when I say confluence. Things line up, more than one thing lines up. So now on my one monitor, let's zoom in here. SPX, we had a nice push up, and then we had some consolidation, and then we had a huge push up right here. Okay, so at this point, once this push down happened, and I see things start to head back to the upside, I can take positions right now on SPY because SPX tracks the S&P 500. You can trade SPX as well, but I'm just saying that, hey, you know, you can kind of track things on the 30-second chart. You know what? Man, it's supposed to be 1 minute. Hold on 1 second. Hold on 1 second. Okay, there we go. All right, so as you see, so 30-second over here, 1 minute over here. So we had some consolidation, a push up, came back down, pushed back up, went up more, and then came back down. So at this point here, this could be viewed as an area of demand or an area of support. So you can say, well, hey, the first time price action was here, it pushed back up, came down, broke down below just a little bit, but it pushed back up, went sideways a little bit, went up, came back down into this zone. So this third touch into this area on the 30-second chart and on the 1 minute chart, you can say, well, there's a good chance that price action is going to head back to the upside. Now, if we break below this low, same thing. If we start to break below this, then you can say, well, hey, things are probably headed to the downside. But that didn't happen. So taking the position right here, setting your stop loss just below in this area, or say when you set your, you don't want to lose more than 15% on a play. So if you enter and you're down more than 15%, or you're down 15% right on the dot, you may want to close that trade. All right, so again, let's say you entered right here or anywhere in this area, you could have had a nice ride to the upside and taken profit. All right, so now I'm talking about trading SPY. So I'm looking and watching this. I'm drawing my boxes, or you could have just drawn a line across, I like to draw boxes sometimes just to make a zone. Okay, so this is on one monitor, right? And then we're doing the same thing. Let's go back to SPY. We'll just go back, and I'm going to go back to the 3 panel. All right, back on SPY. Back on SPY. Okay, we got the 15, the 1, the 5-minute chart. Okay, so let's say this should be the 5-minute. 5-minute here. Okay, now we're good to go. So let's check out SPY. 5-minute chart right here. Okay, and we took our eyes over here to the 1 minute. So look down here, we had a bottom and then we pushed up. So if we zoom in on our 1 minute, we're seeing the bottom, the same thing. So you're looking to match up all of these time frames before you take an entry to make sure things are looking the same. Now the 15-minute chart is not going to show you as many candles because each candle represents 15 minutes of the trading day. But the 15-minute chart is also good to draw your support and resistance. Everything goes back to support and resistance. That's like the hallmark of trading. If you draw a support level on the 15-minute chart, so let's just say, for example, let's back out. So the 15-minute chart, so now you're seeing all kind of like multiple days right here. But if you zoom out on the 15-minute chart, you can see support right here. So let's just draw a box. So this is back on Monday. You could have drawn a box straight across. Because you know that this zone, there was some sideways action, and then it was a build up, and then price went to the upside. Okay. So days, this is Monday. Another Monday. So this is over a week, right? Price was up here. Then we came back down, and look what happened. Price went back up. So on the 15-minute chart, you can draw support and resistance as well. So it's on a larger time frame. So the chances of things going in your favor are even higher. So let's say let's go back. You saw price moving sideways here, and we had a touch, went up a little bit, another touch into the zone, and we went way to the upside. Some time later, we come back down into the zone, and then we gap up. So basically, what you could have said was, hey, well, I got this box drawn. We could be coming back into the box. Here we come back into the box. Right here. And this, let me just move this up here. Okay. So right here, we come back close to that box. And then we push up. So on this chart, we got a bottom. This chart, same bottom. And then here is that bottom right here. So this was Wednesday. This was Thursday today. All right, so this actually is it didn't quite come back to this box. However, it came close to the box and it's still in this zone. So even if you brought this up a little bit to kind of cover all of this, it tapped into this zone and went up. So all I'm saying is that if you're trading SPY, have your 5-minute, your 1 minute, and your 15-minute chart up. Also have SPX, and for SPX, have the 30-second and the 1 minute chart up. Okay, so you want to look at all of those simultaneously, and you want to look for support and resistance across all of these charts. All right, if you're doing a regular company, Amazon, Google, Tesla, Nvidia, Meta, Then you want to have the 5 minute, the 1 minute, and the 15-minute chart up. And then you have your trading platform on the other monitor. So that's those are my views during the trading day. All right, and just to give you that, so you can set your get your whole setup in place. But again, I definitely want to say, try to get at least 2 monitors. If you can get 3, great. Try to get at least 2.